Welcome back everyone to another market review for E-mini NASDAQ, and today is September 12th. It's going to be Thursday, and remember yesterday was CPI. I did a market review for that. That was the previous day video. Today we had a PPI release at 8:30, and here we're on the daily chart for E-mini NASDAQ. Now going into this day, remember yesterday we had a high volatile expansionary movement. We're talking about practically 3,000 ticks in one direction. So usually when you have such big moves like this, the next day isn't going to be so clean. Even if you have high impact news, you're not gonna, that impact news driver isn't gonna move the market in a rather high probability scenario. So remember, after big expansion days, don't expect too much the next day, just because remember, you've expanded so much and it was CPI as well. And I'm also gonna show you guys that we had a seek and destroy model. I'm gonna show you guys that when we get on the 1 minute chart here for that ICT silver bullet session, and why it was best to simply stay out of the market and not really engage, and why it's also important to even utilize that midnight open. But on the daily chart here, the only thing I was looking to be was a possible buyer, seeing if we could trade back up into this order block here, but it wasn't as clean price action. I'm going to show you guys that in a second. We're also trading into this inverted fair value gap. So if you guys draw this out, you see how price is trading into that inverted fair value gap. And not only that, but we also have this new day opening gap here that price was trading in. So again, a very mixed area because you have a lot of levels working at once. And not only that, yesterday we've expanded, a lot. So going to the day, low expectations, simply, lower risk or not engage at all. Simply sit back and just observe price. So dropping to the 15-minute to show you guys, as we can see, we're just chopping around that midnight open. That's not what you want to see. Retail is going to be selling this trend line. That was my main target in going for the morning. But this wasn't clean. You can see it's just chop, a lot of consolidation here. But we see right at that 11 hour, we go down and then we chop right back up again. So the whole day has just been this block of consolidation where the market doesn't really know what it wants to do. But like, again, it's something that you shouldn't be surprised, as the previous day, like I said before, we moved so much. We moved practically 3,000 ticks in one direction. So you going into this day, you shouldn't be expecting, another explosive move again, because the previous day was so expansionary. Because remember, it's expansion, consolidation. So the next thing could be another expansion or reversal. And going on to the 1 minute to show you guys again, remember that midnight opening price, and just look at this. I'm going to zoom out so you guys can see. It's literally, we're chopping around. We're in a deep premium here. We come up, but then he completely reverses right here at that 1034, practically at that mid hour. ICT talks about the mid hour. You got to be careful with that mid hour. And then once we get there, we go back up, we come back down. So that seek and destroy profile that I was talking about is when you see price is simply just taking out buy stop and sell stops within a particular range, and it's not able to get away from that midnight open. So you see we're chopping around, and he's practically taking buy stops and sell stops everywhere. So people that, for example, if you were buying in this fair value gap, takes you out here. So you're in profit, it takes you out, and then we go back up higher. Or anyone trying to sell up here, it's the same thing. So it's just continuing to take out sell stops, buy stops in all this range, really showing that price is just after liquidity and not really looking to really expand. We're starting to see some expansion here now during this lunch session. But let's just say hypothetically, where we're looking for a setup during that ICT silver bullet model, we have a fair value gap right here. As we can see here, we're treating it as a breakaway gap because we didn't trade below consequent encroachment of it. And then we also have a inverted fair value gap. So I always talk about how if you have two PD arrays or more and within the same area, that gives you a higher probability based on the direction that you're looking for. We have this order block here that you could treat it as an inverted order block here, because again, we trade low resistance liquidity environment. We trade up, violating that PD array, and look at how the bodies respect that order block there. So you're combining that we did the manipulation, like taking out sell stops here. We come up, violate those bearish PD arrays. We come down, inverted fair value gap, regular fair value gap, treating them as breakaway gaps. And then you have the inverted order block. Look at the body's respect. We trade up, come back down again, and then we trade higher. So we actually went up right at the close of that macro because we have the 950 macro that starts right here. It started here. We consolidated. Once that macro finished, we expanded. Now, as like I said before, there might have been many of you who went long before that ICT silver bullet model or after. So it was fine. It's just that, for example, here, anyone that went long here, it took it out. So it wasn't very clean. But like I said, you could have taken this entry candle here, and where would be your targets? Like we said before, remember that trend line that we talked about? There's going to be buy stops all here. So retail is seeing this as some sort of resistance. There's going to be buy stops all above here. So we see price stop everyone out starting from the original move up here, and then it begins to trade lower right after that 10:30 mid-hour starts. So for example, if you were trailing your stop, it takes you out right there, or anyone here trying to chase this buy. So for example, there might have been some of you who were trying to buy, let's say for example here, because we treat wicks as gaps. For example, you have this fair value gap here, but then we have, let's say, another one where you have this fair value gap. Look at the bodies being respected there, and then you combine that with the fact that you also have an order block. We almost, I guess, if you want to take this wick up here, include that into the order block, we definitely tapped into that order block plus the fair value gap. We trade up higher, and again, stops up everyone. So again, you're stopped out just because, like I was saying before, you have a very low probability environment due to what happened yesterday. So price is really struggling to get away from that midnight open. And then let me clear the chart so you guys could see this. Now here we have another interesting situation where you have a breaker, high, low, higher high, lower low. But again, these type of displacement candles, especially when they reject this much and then come right back, you don't really want to see these type of gaps get traded to. If price was bearish, so let's say let's draw out this bearish breaker so you guys could see. Let's just say hypothetically, let's say, okay, if price was actually bearish, we don't want to see consequent encroachment of this gap, get filled, which it does fill right here. So if you were short in any of this price action here, let's say you took a short there. So what you wanted to see, remember, these big fair value gaps, you don't want to trust these large civvies, because even if we were bearish, for example, what I wanted to see here is, okay, so we trade lower, we come up, but what I wanted to see is price respect that consequent encroachment, treat it like a breakaway gap, or just a regular civvy. We trade lower from it. Let's say we have another fair value gap down here that you can maybe enter after closing, let's say below this low, or even just before it. We trade up into the fair value gap, and then we see price send lower. That's what I would be looking for if I was looking for a short there. But unfortunately, as we can see, look at this price action. So we engulf this candle, order block there. He's chopping around. The macro is about to start. So we still haven't been able to go lower. So you have all this time where price isn't able to get below this low, which is not good. And we're starting to trade deep into this civvy as well as the breaker. Price trades up, stopping out anyone here trying to go short, and then we head lower. But again, even if you caught this short, let's say you moved your stop loss here or you kept it there, it stop hunts you right back. So these conditions really aren't favorable. If you have a day that expanded so much already, be careful. At least if you're going to be trading on these days, simply just reduce risk in any way you can, or just don't trade at all. Take it as a day where you could just tape read, because you have to understand that you're engaging in a seek and destroy profile. None of this is clean, so it's better to just stay out of the market and not really engage. And heading over to DXY to show you what we were seeing for dollar, and it was a very interesting situation as well. So again, dollar went bearish here on this day. We had this new day opening gap. If you guys draw this out on your charts, as we can see, price is respecting that new day opening gap that we talked about yesterday. But if I go down to the 1 minute to show you guys what we were doing, again, it's the same problem over and over again. So it respected that new day opening gap. We're trading lower, but it's also below midnight open, which is not good, because remember, we want to see, technically, if we wanted dollar bearish, we wanted to see it really more in a deep premium to then sell. That way NASDAQ it can buy. But in this case, it was below. And not only that, we have the same situation with NASDAQ where it's just chopping around all here. So if you guys mark out that 10 a.m. opening price that I always recommend everyone mark out, as we can see here, it's just Chop City once again. We're starting to finally escape it, but you see it come back into the consolidation over and over and over again. So it comes down lower, and then we just chop, chop, chop. Even during that ICT silver bullet session, we see it chop, chop, and then it finally exits, comes back to consequent encroachment, and then we exit away. So all in all, again, these type of days, skip them. If you guys see a massive expansion in either direction, keep in mind that next day won't be as probable as you think it will be. So it's better to just tape read it and sit back and just watch it. So I hope you guys enjoyed this market review. Please be sure to like the video, subscribe, comment down below if you guys have any other questions, and I'll catch you guys in the next market review. Peace.